Ladies and gentlemen, Gay here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is down about 0.5% there on the S&P. Nasdaq down a little bit. Semiconductors pretty much flat, slightly green print there. Only green print today on the semiconductor. Comparing to other indices and sectors, Dow down about 1. Same with the Russell 2000, transport, banks, energy. All these guys did get hit today. Much harder than S&P and the Nasdaq there. Biotech down slightly. Home builder, actually the healthcare is pretty much flat. Home builders got hit 1.5% negative. Utilities down a little bit. Retail down 1%. Emerging markets same. Bitcoin up 3%. Gold and silver miners slightly green there. Dollars flat. Oil's down a little bit. Treasury bond 1.2. VIX popped a little bit, but not much, considering the fact that a lot of these names are down, and the S&P is also down 0.5%, but VIX is only popped a little bit. Let's stick with S&P. Spider 65-minute chart here. So we talked about on last week that the my short-term moving average is declining, and the cultivation of lower lows and lower highs on the price action. And so we want to give benefit of the doubt to the sellers in the short term. And there are some, gap areas that we talked about. And one other thing that I want to talk about, just looking at the price action here, a lot of shenanigans has been occurring last several trading sessions here. You can see that rally, right? Looks like it was going to make a big move next day right there, and then it fell. And the next day or a few days later, we saw a big gap, but we can see this is where it closed, right? Let me zoom in here a little bit. So you can see this is where we closed. A couple days ago, we gapped up, and there's a sizable gap up here, trapping more people in the short term and just, plunging on the first hour. And then something similar has been occurring like Friday. It looks like this is where it closed on Friday or Thursday morning. And it looks like we gapped up. You can see this is where it closed. This is where it opened next day. So a lot of confusion, it looks like. And these gap up and downs and the gap up and fades, it's there to get both people out. This is what I'm telling you guys, not to get too intimate with the micro term and the short term fluctuations, because if you are short going into the close, well, you would have gotten out or gotten stopped out on this gap up, right? If you were chasing this on this gap up long, well, you would have gotten stopped out here. Same thing happened if you're short into the, into the close. This gap up would have gotten scare you out. Again, if you're trading this in the micro and the short term, getting too intimate with this fluctuation, trying to time these short-term fluctuations, and then this gap up would have gotten you out, gotten stopped out your shorts. Some people might have chased long, and then another fizzle. And same thing happened this morning. So it looks like that's where that's Thursday. That's Friday morning, and it looks like Friday towards the end of the day, we ended the Friday. Actually, today's Tuesday. That's Monday, last night's price. And I wasn't here over the weekend, so I just coming back and doing this video. So I'm a little bit off with my scheduling here on these days. But looks like that's Monday, yesterday's price. It looked like a lot of people kind of jumped in right on that gap area there. And then we gapped up. Right, we gapped up here and another fade. So you can see there's a move, fade, gap up, fade, gap, and then move, fade, gap up, fade, gap up, fade. So this is just what's been occurring last 3 days is all mostly psychological, right? So what happens is mostly what the market does. Market will kind of condition and place this complacency over the market. And so, in these short-term traders trying to just buy the dip, trying to make a quick bucks, and these short-term shenanigans we see here, gap up and fade, is there to trap both longs and shorts. And I think market deemed that there's more people chasing long rather than shorting. I think that's why there's a gap up there early in the morning, and getting a lot of bears to be scared, maybe get them out and then, have people chase and then, flushing them out. And so last 3 days, last 3 trading sessions, rather, that's kind of been what's been going on. And so let's kind of look at like a midterm, right? Short to midterm here. First of all, let's kind of keep in mind, we did see this gap filling today, as you can see right here. We're holding this for first couple hours or so, last couple, first couple hours, but last 2 hours of a trading session, it looks like we broke below it and we filled that gap. And on the last update that I did for you guys on Thursday, should there be shenanigans, should there be, further decline, these are the 2 levels. So look, before I come back on Tuesday, but it looks like we did. So we filled that gap right here. We filled this gap. Both of those gaps were filled. And when the gap got filled, there were some pause there, some slowdown. Inevitably though, when the gap opened and fades, when it's not able to hold, people are starting to panic, right? And then that's kind of these price sections are showing us these type of panicky moves. Remember, there are more panicky moves on the downside versus to the upside. Upside tends to be a little bit more docile, more calm, more like inch by inch, marching higher ever so slightly type of move. On the downside, you're gonna see a bit more dramatic price action. Though keep in mind, SPDR's only down 0.5%. It's nothing crazy though. The market, obviously we've been, labeling this market, classifying this market short-term bearish. So what can we expect going into remainder of this week? So for us to understand, it's always good to kind of zoom out a little bit and look at the bigger picture. Maybe it'll give you more, better idea where the market is at overall. Obviously, are we bullish in the long term? Yes, I don't have to say that, a market is bullish in the long term. Market has been bullish in the long term since last year. And this year, obviously, this is May, right here. That's a May price action. And then you got June, we got July, and then you got this August here, right? A little consolidation, August move, and this is a September move. What can we say about these moves? Well, market is still bullish in the midterm here with this cultivation, higher highs and higher lows. What I'm saying is let's not get too ahead of ourselves. We still do have this long-term uptrend going on. And I did adjust my secondary short-term moving average. I can't really call this a short-term anymore because I kind of adjusted it. I kind of loosened it a little bit just to accommodate this here. And that's and this is a level. Remember, that was a gap here coinciding with my moving average. I'm going to call this, this is a midterm moving average. I'm going to call this, what are we gonna call that? Let's just call it for now a purple or pink moving average, right? Short-term moving average, pink moving average, midterm moving average. They're just in between short-term and midterm moving average, right? So that's kind of the level here, is because we held it and we're just hanging around in that vicinity, and the gap just got filled. Keep in mind, my midterm moving average had not been retested, right? The impressive resume guy is still hanging around at 439. Things get even worse tomorrow. We see another down day tomorrow, 439. Keep in mind, for this midterm moving average held here, 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 here. And some point it's gonna break. But as long as, this moving averages are rising higher, we want to give benefit of the doubt to the buyers in the midterm. But in the short term, I have to say benefit of doubt goes to sellers. Gap just got filled, so we may see some type of bounce, right, tomorrow. Best case scenario for the bears is gapping it down, not even worrying about it. Keep in mind that moving average kind of holding it up here in the last hour, and also that gap just got filled. So when the gap gets filled, it's going to act as support. And then we also have that pink moving average in that vicinity. So that's the double support there. So we may see some up move. So then I think, the best case, bears not even deal with this support level, is gapping it down and going after the midterm moving average, that blue dotted moving average. Keep in mind though, right beneath it, we got 435, and that's a level that has been holding this pretty much this entire summer since July. So I think the best case scenario for the bulls was keeping this as a low, maybe somewhere in this vicinity, staying, not getting all the way down to 436. I think 439, even this thing comes down to 439, we can still consider that as slight higher low, right? That's a low, and that's still a higher low. And so they can still get this trend going in the short to midterm. What bears need to obviously want to come all the way down and fill this gap at 435. 435 is where the level that bears really struggle to break below. So that will be the objective for the bears. But again, we're holding here. We got this guy right here, and we haven't retested my pink moving average. That's a longer term moving average. We haven't retested it, I think, this entire year, I believe, since late last year. So let's not get too ahead of ourselves. Let's check out the oscillator and see what we can. If we can extract any more information. And obviously, for bears need to reclaim the short-term moving average, not just 1 hour, right? It needs to not only reclaim the trajectory has to change, the price has to go up, and start using it as kind of a surfing tool to find support and cultivate the higher lows. We don't see that, right? Higher lows are what the bulls need to see. Instead, we got lower highs and lower lows. The oscillator showing us something different. Remember we saw this? Remember we talked about this back in August? We got the lower low on the price action and slight higher low on the oscillator. That's what we call bullish divergence, and we did see that reversal. Well, we kind of have something similar right here, right? You can see definitely lower low on the price action. We got higher low on the oscillator. So we have this slight case of bullish divergence. Obviously, that needs to be confirmed. Keep in mind, my pink moving average is in that vicinity. That gap just got filled. And we have the, bullish divergence here on that oscillator. So I think bulls can make a move at least first 2 hours tomorrow and stay up for the first 2 hours. And then reclaim. You know what I'm going to do? I'm going to put this line right here. 447. So what bulls need to do this, do that, right? First 2 hours, get above 447 neckline, pull back a little bit, use that. It could pull back here, it could pull back later, but needs to kind of reclaim that and then use it as support and cultivate the higher low. That's what bulls need to do. Bears go up, right? Let's say there's oversold bounce, and we do have bullish divergence here. So let's say if that happens, that short-term moving average need to continue to act as resistance, make another lower high, and come down and go for the mid-term moving average and the gap area. That so that you can see we have objective for the bulls, we have objective for bears. So what happens tomorrow and then Wednesday and Thursday, what happens this week really is going to set the tone for how this market is gonna be remainder of this month. I'll come back for you, we'll re-examine, we'll go from there. Enjoy your evening and good luck trading tomorrow.